As you guys can see, not even a week back into trading and I'm already at $12,600, just shy off the $13,000 where we left off a few months ago. So if you're interested in all the trades that I took this week, make sure you stick around till the end of the video. So I'll start off by explaining one of the simpler trades. Actually, I have two simple trades that I took this week that are actually a continuation of a trade that has been going on for a while, and it was also in the last video. So that first trade is going to be on AMD. As I mentioned in the previous video, it's part of the wheel strategy. So we have 100 shares of AMD, and last week we sold a covered call at the $78 strike. We actually didn't get that much premium from it. We only got $21, but like I said, this is an ongoing trade because we still haven't gotten the shares called away. And the good thing is that even though we did get a very small premium from it, the AMD shares have risen quite a bit. So they're currently trading at $77.70, so just below that $78 mark. And we actually have a $79 covered call going into this week, which we got a pretty good premium. So regardless of whether they get called away or not, we've already amassed a pretty good profit just by selling the premiums weekly and weekly. And so I really don't care if it gets called away because we're still going to be profitable. I would rather it not get called away because that means that going into the next week and the following weeks, we have the chance to sell more premium without really having any risk because we're already at a gain for this position, so it really wouldn't matter that much. The next trade is on Apple, and like I said, this is a really basically identical strategy and identical pattern as the AMD position. We have 100 shares of Apple. We sold a covered call, and last week we actually got a pretty decent premium on it. We got $93 for the premium. This week we ended up getting a little bit less, but like I said, Apple had also risen these past couple of weeks, and so even though we've been getting pretty good premiums, we're still at a loss based on the actual average cost that we have on Apple. But because we've been getting almost close to 100 for the last probably 3-4 weeks on this position just off premiums alone, we're actually at a gain. I would have to go back and do the math just to make sure exactly how much of a gain we are, but as long as like I said, I positioned myself so even if we do get called away at $128 a share, we're still going to be profitable. But like I said, similar to the AMD, I would rather it not get called away because that's going to mean that we're going to keep on being able to sell more premium at a basically relatively low risk because we've already amassed a lot of gains just by selling the premium. So the next trade that we ended up taking is actually a couple of trades that I've been taking on Netflix on the last couple of weeks. We ended up taking 2 trades on it last week and then another trade which was 2 weeks ago, which I forgot to include in last video, so I'm just going to include it in this video. But basically all the trades that I've been taking on Netflix have been put trades. So in other words, I should say, I was thinking that Netflix was going to drop, and the reason why I thought it was going to drop was because it was having a hard time getting over that $500 area. I think this past couple of weeks, and I think on Monday also it was able to get over 500, and I think it reached almost I think like 508, 510, somewhere around that range. But in the last couple of weeks it was definitely having some trouble getting over that $500 area, and so that served as a really big resistance level. And so that's how I knew, or that's how I had a pretty good idea that that was a good position to take a put entry on it. And so that's exactly what I did. I ended up taking a couple of day trades on it. One was on May 18th, the other was on May 17th, and then 2 weeks ago on May 7th. So basically all put trades, and then if you mass a total, it comes out to a total gain of $265. I know it was if you look at it, they are some pretty big positions. I think they were averaging right around about 1,500 for a position size. So overall, I guess percentage-wise wasn't that big of a return, but like I said, because these are day trades and these are options, I'd rather get in and out as fast as possible because just how I made the money fairly quickly, I could have just as easily lost money if it went the wrong way. And because these are weeklies, they're going to be moving a lot faster and fluctuating in prices a lot faster than, say, if I had traded an option that was expiring like 2 or 3 weeks later. But nonetheless, you know, $265 gain in the matter of what, like 2 weeks if you take into account the one that was on May 7th. So that's about almost a little over 100 a week. I guess like 130 per week, which is pretty good. Considering that I still had other trades that I made a lot of money on. Okay, and the last trade that I'm going to explain today is on NEO, and I ended up taking 2 trades. One of them was 2 weeks ago, which kind of rolled into the following week, which is last week, and so I'm just going to explain them in the same video. So 2 weeks ago, I decided to sell a secured cash secured put at a $34 strike for $73. So in other words, if NEO if the price of NEO at expiration, which was May 10th, ended above $73, I would have been able to keep those $73 without having to buy the shares of NEO. However, because NEO was trading just below $34 and it looked like it was going to drop even more, I decided to just buy back the position and not have to buy the 100 shares of NEO. Not that I didn't like NEO, but from the perspective standpoint that I looked at it and just looking at the chart, it looked like it was going to drop more. So I didn't want to get into the entry of NEO at around the $34 price if I could get it cheaper. So I ended up buying it back. I think it was on Friday or Thursday at $68. So we did get a gain of $5, but considering it did end up dropping more, I was more than happy to take the $5 gain than have to buy and hold the shares of NEO since they were going to drop more. But going into next week, like I said, NEO did in fact end up dropping, and it ended up dropping, I think, just under $33. So had we had the 100 shares of NEO, we would have been down about $150. But since we didn't, we still had the cash on hand to buy another cash secured put, and so that's exactly what I ended up doing. I ended up buying the $32 strike put for a total premium of $50, and so this time NEO did in fact end up recovering and going back above $32, and so we got to keep the premium of $50 without having to buy the shares of NEO. But looking into hindsight, like I said, NEO is currently trading at $36 right now, so maybe it would have been a good idea to keep the $34 strike even if we got assigned, because we would have been up close to $200. But like I said, there was no guarantee. NEO could have just as easily broken under 30 and continued to drop even more. But this way I was able to secure a $5 gain plus another $50 gain without ever having to even own 100 shares of NEO. So basically I managed to make that profit without having to take a significant risk of holding the stock. So that's pretty much it for this video. I hope you guys enjoyed, and if you guys did, make sure to leave a like and subscribe. I will see you guys in the next